2 hours worth of material I'm trying to jam pack into an exciting presentation in about 60 minutes or less. So first off, I want to thank everyone that is behind this Fibonacci workshop, and just thank you so much for the invitation to you all. I much appreciate it. So let's get the ball rolling here. So this is a workshop on Fibonacci secrets. I'm going to try to go quickly and efficiently as possible. And I know that if any of you here have been through, this is the third day already, you probably heard a lot of a background about Fibonacci if you're not trading it already. But we're going to look into exactly what I do, and when I look at analysis for the markets, specifically the SPY. My name is Ahren Stevens from TradeOutLoud.com, and I will be presenting along. I do believe my co-host my partner in crime is also joining, but he's not going to be speaking. So, Fibonacci secrets and strategies for greater success. Again, we have to give a disclaimer, but I'm sure you've all had your own disclaimers already. So we are part of Eagle Financial Publications, and they are based out of Washington, D.C., and serve hundreds and hundreds of customers. So this is a little bit of a graphic of me and myself, Hugh. We are two of the day trade SPY traders at TradeOutLoud.com. We help our traders to make the most out of their trading experience and to get greater profits in the markets. I believe we had something like 8 or 9 trades today that were profitable. I'm not sure if I can talk about all that, but we do help our traders get better success in the markets. So this is a couple of SPYs opening up the secret to the markets, which is the Nautilus or the Fibonacci. And again, this is Eagle flying over some of our Nautilus that you can see in the ocean, and we'll get to that in a second. So this is I'm the gentleman on the bottom, Ahren Stevens. So we provide financial news, commentary, and advice. And this is a picture of me, and a little bit about me. I'm a SPY, but a little bit about me. I am one of the 2 day traders at Trade SPY, and it is a part of the Eagle Financial Publications family of products. Now, I have a passion for the markets. I got started studying the markets and day trading and different things when I was in the teens, and I'm well in my 40s now. So you can imagine I've been at this for a while. I'm a self-taught market technician. I also have a Series 3 commodity broker certification, as well as my own CTA, and I'm also a former analyst for a $150 million commodity CPO, a commodity pool operator fund. That's actually we're going to just be going to part 1 and 2, and then if we have time, we will get to part 3. So these are some of the mentors that I learned from: Larry Pesavento, Joe DiNapoli, and Timothy Morge. If any of you are old enough or have been around the game long enough to know who these people are, the more power to you. Please put that in the question box. I'd like to know your experience with them. So just a tribute to them. So Fibonacci and the hidden mathematics behind all markets. Now I'm going to go pretty quickly because I'm sure you've had a lot of history about Leonardo da Pisa and Fibonacci already, but because I kind of want to dig into some of how we trade and how we look at the markets at Trade SPY and some chart examples. So Leonardo da Pisa, or Leonardo Fibonacci, as he is also named, also coined. He was born around 1170 in Pisa. He was expert in the Hindu Arabic numeral system. He had an agricultural problem that he wanted to solve with rabbits. So he wanted to get an understanding of rabbit population. That's how these numbers came into being originally. So also you'll get to understand that Fibonacci's work has gained broader recognition even now in computer science, biology, and finance. So again, this Fibonacci number series that I'm sure you all are familiar with, and some rabbits showing the numerical sequence of 1, 1, 2, 3, 5, 8, and then continuing down would be 13, 21, 34, 55, etc. Again, the Fibonacci spiral showing the exact same thing. That's where we get the Nautilus from. 1, 1, 2, 3, 5, 8, etc. And also 1.618 in mathematics is known as the golden ratio. It's also given the Greek letter phi, as some of you probably know. It's very important also in mathematics, art, architecture, and nature, as you know. And so, kind of slowing it down a little bit, let me mention that all of you are a Fibonacci spiral. All of you, when you're in your mother's womb, you come into being with your body, your DNA, your very essence is Fibonacci. So Fibonacci is life. So when I was thinking about what the title is, I was almost going to call it Fibonacci's life, but that was a little bit too generic, possibly, or a little bit too deep or ethereal. Okay, thank you. And so we also have, the galaxy, roses, the Nautilus, sunflowers, even our own ears. I've even seen pictures of Sylvester Stallone. I used to have that in one of my presentations, and other models where you can make their faces into Fibonacci. But and then also the golden spiral, golden Nautilus. All right, so let's kind of get to what we at Day Trade Spy, at least for me, look for trading. Okay, and this is probably a few other traders have talked about this, a few other presenters. It's very well known ABCD pattern, but I look at it on multiple time frames, and I also look at it on multiple charts at the same time. So when I'm looking for trade entries, and I'm not going to get too much into multiple time frames, because if you don't understand one time frame, it's kind of hard to understand all of them. But we will zoom in a couple times to different time frame charts. Going down from 1 hour to 5 minute, for example, 4 hour to 15 minute, for example. So I do believe I have a couple examples in here for that. So what we're looking for is a pullback. So from A to B, you're looking for a pullback into that 618, 50, 382, and then generally going into the 127.2 or 161.8 extension. So this is an example of that A, B, C, D, also symmetry, price symmetry that you're probably familiar with. Or if you're not, this is a good primer on that. So A to B equals C to D to the downside here on this particular example. And then when you mark up the Fibonacci right here, based off the Fibonacci levels, you have an A to B pattern. It comes in directly, hits almost to the penny of the 78.6% retracement level, and continues even further down to that 127.2, and then almost hitting the 161.8. But by using the symmetrical A, B, C, D, it also helps you to get an understanding of the Fibonacci A, B, C, D. So a lot of times, and I'll get into this in a little bit, if a symmetrical A, B, C, D is a little bit before the extension, then I tend to get out a little bit early. And if it's a little bit past the extension, I'll look to see if it'll continue to give me more profit. And this is the same A, B, C, D, but this is the time element. Now, I'm not sure if there's any presenters here that have talked about Fibonacci time, kind of like I'm going to talk about it. I mix time cycles with Fibonacci numbers, okay? And many, many, many times you can spot the reversals in a general area for the market turning points. If you are in an uptrend, you can spot where it's about to turn. If you're a downtrend, you can spot where it's about to turn to the upside and vice versa. So our D was completed almost exactly at this 127.2 and then the 261.8, and our C pivot was almost exactly within a bar on a 1-hour chart, the 78.6 and the 161.8. So I'm even going to get into a little bit about how to set up alerts, but if you're trading a smaller time frame, it's pretty easy to watch price hit those areas and reverse. And we saw that actually happen today in the trading room. I'll show that example towards the end if I can get enough time. So what day traders, what Fibonacci ratios do day traders prefer? With 23.6, 382, 50, 61.8, 78.6. Some use other ratios, but that's not the ones that we use at Day Trade Spy. So now this is an example of, and I have a lot of examples, so I'm going to try to, like I said, jam as many of these as I can while you follow along. If I go a little bit fast, please rewatch the recording, take screenshots, and you'll be good. So this is an example of actually double the range now, or 100% extension. So this is A, B, C, D, where price reversed exactly at that extension there, almost to the penny, where it hit the 443.69. So you saw some support coming here at 426.72. That became the C point. And the thing that I do want to mention is that with 23.6% retracements, usually you're in a very quick trend. So if it's a very quick trend, you could look for two things. First off, the 23.6% retracement being support, and then a continuation and breaking of resistance. Second thing is the trend is going to continue, more likely than not. Okay, so if you hit a 61.8 or a 78.6, your trend may stop. You might not get to your extension. But if it's a 23.6 or a 382, this trend's on fire. So just be aware of that, especially in the current market situation. All right. So I'm going to get to questions. I see some questions coming in already. I'm going to get to questions at the end, because if I start with questions, we're not going to get through this. And I really want to make sure everybody tries to absorb as much information as I say. So if you have a question, feel free to put it in the question box. We might not be able to get all of them because I have a lot of information I want to cover here. Another example of the A, B, C, D pattern. So we have the A down here, the B up at 475.85, and the C pivot at previous support, may I add. So previous support came in and formed the C pivot. And then you got to the D point up here. Price continued, but that would be one of your major target points, would be the D point. Now, especially if you see a big swing down like this, you can also form a new Fibonacci from that C to the new high, and sometimes that'll give you a re-entry, or the C here, the new pivot here, and that'll give you a new entry to the upside on a very fast trend. Now, I'm going to talk a little bit about volume. I love volume. Volume is my friend. So the reason why I like volume is because it's telling me when buyers and sellers are coming in at these areas. I've studied several different books on volume and volume spread analysis. There's a lot available. David Weiss, I want to give a call out to David Weiss. He was a very good market technician, had his own website, passed away, I believe, 2 years ago now. But he wrote a book on how to spot, market and market reversals with volume at major support and resistance levels. I kind of mix it in with volume as well as Fibonacci levels. So here, for this particular example, you see volume start to pick up near the C point, obviously. And I'm not the only one that sees this. You have a lot of market makers. You have a lot of retail investors, institutions that see the exact same Fibonacci ratios that I do. So they were buying here, and then it continued up. Now, for this particular example, it did go up a little bit past that, but I just used the one to the left, depending on how the ratios come up. Again, another A, B, C, D pivot, A, B, C, D pattern formation with the 50% retracement into the 161.8% extension would have yielded a good return here. And for those of you that are trading options, this is a really good swing strategy on a 1 hour chart. 1 hour chart is my favorite chart. I do a lot of my analysis on 1 hour, but I look at the weekly and daily all the way down to the 1 minute chart on the SPY. So just a heads up if anybody has that question. Again, the volume. Okay, so the volume came in. You see a long wick here. You see a bullish engulfing pattern. It has the long tail, but the next bar also had a long tail from the downside, showing that there's a possible reversal here up. So we have a lot of information here as far as context goes that you can take. You could have taken a trade opportunity to the upside based off that 50%. Again, so an A, B, C, D pattern here. So we have previous support that came in at the 61.8% retracement. We have a Fibonacci confluence of previous support with the Fibonacci. And then we have a move into the 161.8% extension, and eventually all the way to the 227.2 extension. Oftentimes I don't use those further extensions because the market will reverse. But for this particular example, it reversed very close to that particular extension. All right, and this is volume and how volume works within these bounces off this support. So you have the I believe this was the 410 level, a psychological level. You have increased volume, you have price stalling, you have previous support. Price moved off this level and continued to rise way past your 161.8. But that was also where some sellers were hiding. So some people had their trade from here with a target of 161.8. That's how you can tell that those people were exiting that position with some heavy volume here, as well as the price over the next two bars collapsed. So people were buying here at the 61.8, and their target was the 161.8% extension. There was a lot of people that did that. And then people started getting out a little bit higher at 437.50, and then again at 442. All right. So I believe putting that all together with Fibonacci time, you could identify the turning point within 1 bar, possibly 2 here. So this bar is at 127.2 Fibonacci time extension. And I call them extensions. People might call them ratios or other things. But me personally, I call them extensions because we're going forward in time. We're projecting forward in time before it happens. So we see this here, this low to this high, and we're looking to predict the future. Okay, where is this going to stop? Where are we going to find support? Well, we found support at 2 convergences of Fibonacci ratios, 127.2 Fibonacci time and the 61.8 Fibonacci retracement. Now, I call these energy points. I get that from action reaction and Andrew's pitchfork work, but that's my own term to use for these particular Fibonacci areas, because I do see those on Andrew's pitchfork charts and action reaction sets. So notice how the 161.8 didn't get this high exactly, but it did call this dip. The 200 called this low. The 2.272 called this convergence with the 161.8% extension, and then it almost called the high here with the 261.8, very close to that, but actually called the dip within a bar here. All right. Now, if I'm going too fast again, I have a lot of information to get through, and I'm trying to do it pretty quickly. So I'm trying to give you as many examples that you can find that can hopefully get you to get some lights on in your mind, and as well as green lights in your trading account. So again, here, an ABCD pattern where we had some bouncing off the 78.6 all the way into the 161.8% extension, the market dropped. This particular example, again, with volume, notice the amount of volume. Some of the heaviest volume within the last month, it looks like, on this particular chart, was at that area, near the 408, 410 level, and price collapsed and found support again after that. And then when you put this together with the Fibonacci time, notice this, guys. This is really good stuff. So you have, now I took this low, but you could have taken the other low as well. So you could use this as an A, and then this is a B. This would probably be the 50%. But for this particular example, I used a low to high timing sequence. So this low to this high predicted the turning point in the market at the 127.2% time extension. And then look at this. We predicted the high bump here, the high bump here, the high bump here within a bar. Okay, predicted this high within a bar, 2.272. Predicted this high on this bar exactly. Okay, so very, very good stuff to have this in your tool set. Okay, and I just want to explain. I probably didn't do that earlier. The 0.382, the 0.5, and the 0.618. I use these as trainers. Okay, so if I'm looking, not like Megan Trainor, you know, the famous singer or anything like that, but if I look at this swing and then I see some action here in the past, it's similar to a tail on the Andrews pitchfork, which I'm also trained in, but we're not going to be talking about that today. But if I see some action on this, like the 382 especially, that bar was a training bar for my eyes. Okay, this bar was a training bar for my eyes because price will either reverse or accelerate at these points. Okay, so we saw also some reversal here at the 786. Now, if I don't have space, because the tools sometimes don't allow me to have enough space, especially in Thinkorswim, I'll just use the major levels: 0.382, 0.5, and 0.618. I will show a trade that we took today, Sri, as well as some other things. I'll get to your questions as well. So just an understanding, Fibonacci confluences occur when there are multiple Fibonacci retracement extension levels intersect, highlighting strong support and resistance zones. Retracement levels key ratios: 23.6, 382, 50, 61.8. Also the 786. They didn't put that one in there. So these predict price targets beyond the initial range. So those are extension levels. The confluence zones are intersections of levels from different time frames or swings, suggesting stronger price reaction. So in an application, use these confluence zones as support for entering trades, target these areas for taking profits, and you place your stop losses just beyond these zones for protection. Okay. All right. Let's see. Again, so a confluence at support, right? That's actually at 130. So we have A, B, CD. Actually, this is the same example. Let me see here. So just an example of two Fibonacci retracements at the confluence zone. So this is actually, as I mentioned, I forgot that I had this slide. This is a Fibonacci confluence. So two different swings showing the same level, okay, as well as that previous gap resistance becoming support. So gap resistance was here, gap resistance was here, resistance was here, support came in later. Okay, so you have this area, this band in here that ended up acting as support when it started to hit the retracement level, and then you have the fib time come in at 1.272, the exact bar where we see liftoff. This happens every market, every time frame, folks, not just SPY, but whatever you trade. This could be a stock, this could be Tesla, Apple, whatever. This happens with every single thing because you're measuring the frequencies of the swings. And as I mentioned, we are Fibonacci. Fibonacci is life. So if people are Fibonacci, you have a whole bunch of people trading. They're basically putting their imprint and their Fibonacci imprint into the market. All right, here's another example of confluence that we have on the chart. So we have an A, B. So from this high to this low, and then from this high to this low. So we have two of the same swings. And then we have a confluence zone in between that 415.31 and 411.71. So those two levels intersect in there. And we started to see some resistance around 416, and price just fell off the shelf, fell off the cliff, however you want to say it. And where did it stop? It stopped directly at that 127.2 extension, almost to the penny, folks. Look at that. Okay. So I believe that was the bigger, the smaller swing Fibonacci extension into that 127.2. Now, when you add time confluence, now this gets even more three-dimensional. When you add time confluence, it gets even better. Okay, so you have two different anchor points for Fibonacci time. So this anchor point for Fibonacci time, this anchor point for Fibonacci time, and then you have the same anchor point for the low. So this Fibonacci time in red, called this high within a bar at the 127.2. This Fibonacci high in gold or yellow, called that within 3 bars, or at least this general area. So again, where price converged at the 50, at the 382, and then at that Fibonacci time extension marked the turning point for the market. That was like, okay, the price is no longer going to get higher than this. Okay. Again, just a extra markup. So you have A2, B, C, D down here. And then also, I mean, price continues a little bit. Usually at this point, because of gaps in time and things like that, I do try to find a different time extension. But they do often work even into the very far future. So the mechanics of retracements and extensions. Why are 382, 50, and 61.8% the best buying opportunities for retracements? Frankly, because they work. They're what the market makers, the institutions, the larger retail traders, that's what they all see. When they are trading, they're looking at these opportunities for buying and for selling. So selling in a downtrend, obviously buying an uptrend. If they're not already in the move, if you can't call the top, get in at a retracement, right? I think everybody understands that. So if you don't call the bottom, if you can't find the bottom on an extension and price reverses without you, at least try to get in on a retracement to the opposite direction. And you'll see that up here. Okay. So this is an example of the 382, 50, and 61.8. Price ran right into that 50%, found some buyers. Let me see. I think there's another. Actually, no. Found some buyers, and where did it stop? It stopped at the 161.8, or at least very close to that. Trust me, I'm not the only one that has this on their chart. The larger institutions, JP Morgan, larger traders, Goldman Sachs, all those people have these same ratios on their chart. Another example again, 50% into the 161.8 as well as the 127.2. This is an example where price used that 127.2 as resistance breaking and then find it as support and then continue. Sometimes you'll see that. Okay. Again, the 382, 50, and 61.8% kind of zone in here where you'd be looking for buying opportunities because of this big swing up. It came right into that 50% near that 300 level. This is a while ago, but came into that right at that 300 level, found support, and continued up. And again, The 100 to sorry, the AB came right down here into the 382% retracement, stopped at that 246 even, hit 1, 2, 3, and then moved up. Now, one thing I do want to talk about, and I didn't mention it briefly, is if you are not familiar with Fibonacci or support or resistance, and you're kind of a newer trader, you may want to wait for this initial bounce, especially after this bullish engulfing candle here. I wish I could zoom in, but right after this bullish engulfing candle right here, actually, maybe I can just annotate it briefly. So right there. So right after that, you kind of know that the market is going to go up, because you're already in an upswing. You already broke this high, this high. You're almost trying to break that high. So when price is shooting up like this, and then you get that bullish engulfing candle right here, that's a big sign. And then this test, retest, retest. How many more tests do you want? Hopefully, we're not going to have any more tests on this. But yeah, you're examining your homework. Yeah, right. Market shot up right after that. Okay, everybody saw that, and everybody took that to the upside. Okay. Again, this is an example of the 127.2 becoming resistance, becoming support, and then continuing upwards. Sometimes you can even take trades and scalps off these levels if you're trading options, or if you're in the futures market, which I also have a background, or the Forex market, which I also have a background in. Okay. And then where did it stop? Lo and behold, oh my goodness, 161.8. What a coincidence. Again, the 161.8%. I think this might be a mistake slide, but 1.618, 161.8 acting as a resistance there. Again, this is an example of a fast trend reversal. So we have a steep trend. This is probably actually after an ABC. I think I have a slide after this. It's the ABCD pattern to the downside. Price started a fast reversal to the upside. It didn't catch its wind enough, which happens sometimes. And it started to find some support here at the 786. Again, what did I say before? This is actually into a buy zone. I call them buy zones, but these areas where there's former buying or selling opportunities. There are sellers here. These are buy or sell zones. There's sellers over here. Buyers or sell, buying and sell zones. You have 1, 2, 3, possibly 4 bounces off this Fibonacci level. Basically, it's just screaming to you. And in former presentations, I call this the market makers are showing you their hands. The market makers are showing you what they're going to be doing in the future at these levels. Okay, so after 1, 2, 3 times, I mean, third time's a charm. You would have taken this baby and taken it for a ride all the way back up to 161.8% extension. And this is a 1 hour chart, so you could have taken a swing trade off this within a few days. But we trade these levels in and out during the 1 minute and 5 minute charts in the room at Day 3 SPY as well. I think this is a separate example again of the 786. Probably a little bit harder to get into this unless you started to look for longs after the reversal, unless you went to a smaller time frame and possibly gone in at 382 over here all the way to the 127.2. But lo and behold, where did it stop? The 127.2, and then it reversed after a triple top formation and fell back to the earth. And I did want to mention too, I don't have any slides on the pyramids, but the pyramids as well form. You guys have probably all heard this, but the pyramids also do have a lot of Fibonacci number sequences and ratios within them as well. And a great trader, Tom DeMark, I met him in person, put me onto that at one of his presentations, and he said he got started reading all about Fibonacci in this book called Pyramid Power. So if anybody's interested in some non-trading related interesting stuff on Fibonacci, Pyramid Power is a book that you might want to look into. Okay, again, Fibonacci support and confluence with regular support. So support here 1, 2, 3, 4 times that stopped at 61.8%. And then we also have the high that is called with the 161.8% extension. Not a coincidence. Called that within a bar. Okay, so I took this low to the high and I called that 161.8% extension into the high here on the exact bar. Okay, that's not a coincidence. This is life. This is universe. This is everything in nature. Everything around you is mathematical, and that's how this works. Okay, so does everybody hear me okay? Says somebody lost audio. Just want to make sure that you guys are hearing me okay.
Yeah, you're fine on audio.
All right, great.
Just one person.
All right. So again, here, another example, 78.6% retracement into that 161.8% near 301.81. So sometimes the market will be kind of funny and it will play around with the ratio. So you see that some buyers try to get in here and price continued lower into the 78.6. Price came back up, came back down, 786, and continued to go up. All right. Another time where market reversed near the 200. So here we have a 786% extension. Retracement into the 127.2 extension. So then you also see that 100 become support and price continue higher. But you have so many people taking their profits here. Okay. Again, these ratios here are where price is accelerating. Okay. And it was trained a little bit correctly, but the 127.2 was actually a continuation of the downtrend, whereas you'd usually predict it to be a time where it reversed. Sometimes if you do a low to high, you can also do a low to low, high to high, high to low for Fibonacci time, and those are kind of interesting sequences to do. Can I show where to anchor my fib ref? Phil, we're going to get to the questions. We're going to get to the questions afterwards. All right, so this is again an A, B, C, D formation. The 50% in the 161.8. Again, this is a 61.8 exactly with former resistance going all the way down to 127.2. It didn't reach the 161.8. So former support becomes resistance and a Fibonacci confluence here. So you have so many times that it hit this level. It's also 289 near that 289.20 level. So 1, 2, 3, 4, 5 times, 6 times, 7 times, breaks it 1, 2, 3 times, maybe even 4 times. So it's hit this line almost 10 times back and forth. Okay. And that's in Andrew's terms, that's a multi-pivot line. That's when you really know that a line is cooking, and it's turkey season. So you can get some money in the bank. Now, I do want to include this. Obviously, this is not a presentation at all in some of my experience with Andrew's pitchfork, but you can use Andrew's pitchfork with Fibonacci tools, and they work extremely well because you're basically both measuring when price is going to run out of energy, as well as when price is going to reverse. So you're both looking for the A, B, C points. So this is the A, B, C. You have the 786 here. Stops where? What a surprise! 127.2 comes back down, tries to find some support here, and you could have traded off this middle median line as well. I do believe that the middle median line did not hold support after all. It ended up, it did not continue to the upper median line, but you'll see that possibly in the next graph. And just working with time again on that. So, all right. You can also use it with action reaction sets. So this is a very similar time for that particular trade. and you can use it for spotting your action and reaction. So you draw a center line, your action would be above you, as above, so below. The emerald tablets of Toth, if I'm saying his name correctly, I've read it. Another good book on that is Divine Magic, very similar, and the Kabbalion. If any of you know some of the largest traders in the world, they have to read that book, the Kabbalion, before they actually get into trading, and some secret work of the market that I'm not able to talk about, but related to W. Gann and so forth. This would be a sliding parallel, an example where price started to reverse off of the Fibonacci level, and it reversed and then came back up, held as support, and continued up into those higher levels here, into that extension at 161.8. Oh, well, what a surprise. So a lot of times when I give workshops like this, for those of you that like to stay, and I hope you guys are paying attention, I like to give a couple of nuggets towards the end. We're not towards the end yet, but what I like to ask traders is, what is the context? Is it clear, and do you have conviction? Do you have the conviction to take a trade? So the context of the market, is it trend bound? Is it trending? Is it range bound? Are we in a downtrend? Are we in an uptrend? Which direction is the market headed to, right? So that's the context. Is it clear, right? Do you have a clear opportunity? When I was talking about how that price was hitting 10 times, price hit 10 times and then dropped, that's a pretty clear opportunity. Do you have the conviction to take the trade? The conviction would be that the market was rising or dropping. Some people use their guts, some people use feeling, but I try to use my eyes as much as possible, and then my crystal ball second, and then guts third. So, all right. And again, what is your trading plan? Do you have a stop loss or defined risk? Now we're not talking about money management at all in this series, and we're not talking about capital allocation. But for trades, look into risk of ruin if you're new to trading. By Nasser, he wrote a book called The Money Management for Futures Traders. It goes into detail. There's also a spin-off book, I forget the name of it. I read it when I first started trading, talking about money management and percents to use, but try not to risk more than 2% per trade if you're trading futures, commodities, and forex. If you're trading something else, kind of look into that, option strategies and whatnot. But for commodities and forex, and for larger traders that want to keep their capital allocated, I would not risk more than 2% per trade. So what is your entry area and what is your target? So set stop entry target. That's a big thing to know, along with the context. The 3 C's of context: is it clear, and do you have conviction? All right. So for those of you that like Fib time, this is just a very quick understanding of how to set up a Fib time alarm. So if you find a Fibonacci time and you want to exit, or if you want to enter, you need to find the Fibonacci time. You need to initiate your alarms, integrate your price and time objectives, and be sure to protect your gains. So again, it goes into the 3 C's, as well as context, and conviction and clarity of time. So for this particular example, if you want to set up a Fib time alarm, it's easy to do in TradingView. If you're swing trading on a chart, you draw a vertical line, and then you add a alert to that line. So with everybody having their cell phones or whatnot, you can also calculate, okay, the market's going to be at Friday, February 12th at 5:30. I should probably look at seeing if I should get out of this trade or not. Okay. Now these are crystal clear, pitch perfect ideal scenarios, but without learning those pitch perfect ideal scenarios, you're not going to understand what the outcome should be, the perfect outcome. Okay. Again, another time where the price continued up into the 161.8, and then a confluence of the 2272 Fibonacci time extension. You could put a resistance area up there, as well as the vertical line, and then add an alert in TradingView on that particular line, or an alarm on your phone. Again, another example where price got into that area, 127.2. So you take this trade from 786 or possibly 50, depending on when you got in, and taking it up to the 127.2 extension, as well as the 1.618 price time fib time extension. So this is an intraday swing trade example. So if you saw this particular trade, you have a bounce at 382, and as well as a 50%. Price rose up and hit resistance right before the bell closed. Okay, so if price does not get your extension objective, more than likely it might hit a double top, it might hit previous resistance, something like that. So you had a couple of opportunities. So if you didn't get in at the 50%, it came up and started targeting that 382 level there, and you would have had an opportunity to get in this trade. So if you weren't already in this trade, it gave you a secondary possibility right here in this area to continue up into previous highs, or near previous highs. And this is that sell zone, buy zone that I was talking about. Other educators have different terms for that. That's just what I call it. So for this particular example, I'm not going to get too much into the math, but you can come back and look at that. For this is if you're trading an option, and how much you could possibly get with the option, risking 33 cents on a smaller time frame option, just an example, and then gaining at least 33 cents or more on that trade. Okay. Now I do have some market prognosis or forecasting towards the end, so please bear with me on this. Another Fibonacci trade example, intraday swing example. So you have the A, B price came back down, hit the 382, a retest the following day of the 382, and price continued upwards. Okay, so if you were in this trade, you could have had an entry here. You're in an uptrend. You had an entry here. Your stop was below the low, and your exit was at the first exit would be at the 161.8. If you see price accelerating, sometimes people will change their orders, so they will change it to the next extension. That's also an advanced trading strategy that you can use to try to capture some gains, or you can place a trailing stop, depending on what you're trading, below these lows. And I think that's the next slide. So again, you move your stop below these lows as it starts to creep up, and then that you can capture larger gains for that. Right. 50%.
Hey, Aaron, if you can hear me, sounds like you're having connection issues. Right. Everyone can hear me okay, right? Okay. Yeah, sounds like Aaron had some connection issues here, so see if he can make it back on. Okay, yeah, he just disconnected, so hopefully he's able to log back in here in a second. But you can check out his website while we're waiting here. daytradespy.com.
Sorry about that. It looks like I had a crash here. Um,
Yeah, um,
let me pull up
glad you can make
my let me
it
let me pull up my webinar real quick.
back. Okay.
So sorry about that, guys. That's what happens when you have so many charts and trading things and everything going on in the background.
Mhm.
That is not very common for me. So let me see if I can pull up my presentation. We'll get about close to finishing anyways. Um, I think it was because I got too excited. That's what happened. Um,
It sounded like your just your connection went out.
oh yeah,
But
yeah, exactly. Um, all right, let's see here. Sorry, it takes a second for me to get this up and running. All right, so where do we leave off? I think number 60,
we're we're not
65.
seeing your screen yet, by the way. Yeah.
Yeah, sure, sure. 1 second. Okay, yeah, here we go. I think it was this one. Um, all right. Okay, and all right. So again, our intraday trade example, we had a retest of 382 and coming into the 530, 15 level for a particular option. If you had the entry, your entry would be 520, 57. Your exit would be 527, 14. Your stop would be a little over $1.50. Your profit would be 657 or 328 per option, just for this particular example. So if you're in that trade, you'd be risking about $1.50, and you'd get a little over 4 to 1, 5 to 1 actually. $6.50 to $1.50 is about yeah, 5 to 1. Sorry. Um, so let's see here. I think we're towards the end, so I'm going to try to get through as much as I can. Again, Fibonacci time, showing the target on an intraday chart, 1.618. Your entry is at 500. Your stop would be at 498.50. Again, 53, another $1.50 stop. If you do it below the fib, if you did it below the low, it would be a little bit more. Obviously, it'd probably be about $2.50. But you made $10.40 on this trade if you would have taken this particular ideal entry after it started to rise into that previous resistance area and symmetrical target and Fibonacci time zone. All right, just more recent market examples. We have, I think we may have even talked about this one. This recent swing down from July to August was a symmetrical extension. It went past the 161.8 into the 100% and reversed. We also have this recent market example in May, came down, hit that 382, continued upward. It stalled very close to the 161.8% extension. And then here, I believe this is from April. It would be hard to read this, but it was a triple top. It was right after Easter weekend. It was a triple top. It came into this area at the 61.8% and dropped. It continued to drop past the 161.8 into the 261.8, and that's where you saw reversal. So when price compresses like this, when it's compressing and not expanding, oftentimes you'll see the extensions because the retracements are kind of compressed. The extensions can also be extended like this into the 261.8, etc. Here you have today, actually. Is this price action from today? Yes, I believe. Yeah, so for now. So we're at the 382, actually 236 on this particular swing. I think we're at the 382. I don't think I do this particular one correctly. But this is what you were going to see on a weekly chart. So for this particular chart, I did want to mention that a couple of things. So for those of you that stayed to the end, I did want to mention a couple of things. Is that for this A to B to be completed, you're going to see around 608, and also Fibonacci time at 261